In order to provide quality public services in health, education, environmental protection, and security, the state asks that everyone pay their fair share of tax. But is this really the case? In fact, astronomical sums evade the public treasury, and our governments are complicit in this. The leader of a Canadian multinational has just declared his company's income. The finances of the multinational corporation, let's call it MNC, are healthy. The company will therefore pay tax. However, thanks to a multitude of accounting tricks thought up by creative tax experts, the company is able to disguise part of its profits and reduce its tax bill. Is it a magic trick? In fact, it's an illusion. The MNC channels its capital through Fiscal Paradises, where it has set up subsidiaries. Thanks to their insignificant tax rates, lack of regulations, and banking secrecy, these states, Fiscal Paradises, provide very enticing opportunities for companies. Canada has signed tax treaties with some of these states, whereby enterprises that have set up business there can avoid paying taxes both there and at home. This is how MNC can declare a hefty share of its profits in these fiscal oases with total impunity. Does all that seem very complicated? It isn't. Among the many ploys used by both enterprises and individuals, here is a classic one. Let's say MNC produces telephones in its factory. To do so, it benefits from our infrastructure, our legal system, and, of course, our healthy and well-trained workforce. MNC received an order of 1,000 telephones from a European client. It sells them at $1 each to its subsidiary, MNC Caribbean, which in reality is a small office on a small island. MNC Caribbean sells the product on to the European client for its real price, let's say $25 each. Not one single telephone has actually transited through the Caribbean, yet MNC Caribbean has made a profit of $24,000. The subsidiary of the Canadian company must soon pay its taxes. How much? $240 because, on this island, the tax rate is 1% of profit. MNC Caribbean can therefore pay $23,760 to multinational Canada. MNC will not have to pay a tax here because its profits have already been taxed in the Caribbean island. A treaty signed by our government with this island prevents double taxation. MNC will therefore be able to redistribute this money to its shareholders. The now richer shareholders will, in turn, be able to put this money into other offshore companies, which will ensure it makes even more profit without the government being able to say anything. And that is why Fiscal Paradises occupy 5 of the top 8 locations for Canadian investment abroad. In 2011, $53.4 billion worth of Canadian direct investment went to Barbados, with which Canada has agreed to tax amnesty. In 2010, the value of the goods exchanged between the countries was only $50.4 million. Hence, the capital circulating in Barbados does not generate any commercial activity. It is purely the result of fiscal optimization strategies. It is estimated that half of the capital circulating around the planet today is channeled through Fiscal Paradises. Everyone must pay their fair share of tax. It is high time governments stopped burying their heads in the sand. Tackling tax havens is quite simply a matter of social justice.